rental space. Our size and kind of gross bookings may have declined sharply in 2020, but recovery is very much underway. In terms of gross bookings, we project 2021 to actually outpace the gross bookings of 2019. So despite some pretty steep falls within 2020, we don't need to go too far into those dark days. We really are on that recovery trajectory, and we see a pace of continued growth within short-term rentals. That also applied to supply within the short-term rental space. U.S. supply dipped sharply, but it's returning to pre-pandemic levels. We don't see inventory as being quite where it was before the pandemic, but it's continuing to rise and has definitely passed the worst of the dip. Right now, we project that there are about 700,000 hosts and property managers in the United States. The majority of them are still on the smaller side. There's the one unit still encompasses the majority of the pie here, but while those who have 50 plus units and are running these bigger companies are still a smaller portion of hosts, they are quite a significant portion of properties overall. On the traveler side, we predict that 46% of leisure travelers who paid for lodging in 2019 or 2020 stayed in a short-term rental at least once. Quite a big number here, quite high rates of usage within that paid lodging space. And one of the great points about these users is that they seem to be really happy with the experiences, showing a lot of potential for loyalty. 59% of past short-term renters expect to stay in another rental property by June of 2022. In terms of where they're going, those domestic destinations are going to continue to shine. However, there is a lot of comfort with people leaving their immediate region. So while they still want to stay in the US and there's still some complications with using short-term rentals outside of domestic destinations, people are willing to get further from home and really have that home away from home type of experience with their lodging. Most common destinations, both in 2019 and 2020, remained city, urban destinations, as well as the beaches. And so in terms of the hosts and who is running these rentals and what's in their head, let's look at their business goals and growth. Interesting thing with them is that some hosts have very entrepreneurial minds. They're looking to generate profit. They're looking to run these rentals as a business. That's not universal, and that's not for everybody. 30% are only looking to offset their mortgage, rent, or expenses, and another 29% are looking to completely cover their rent or expenses, but for them, it's not necessarily that full-time type of occupation. We describe these smaller hosts as people who have a portfolio of under 10 properties. But even those who are looking to make a profit aren't quitting their day jobs just yet. 20% are saying, of those who are looking to make a profit, are saying that they're looking to provide full-time income, while for many others, it's just an option for part-time income, not necessarily the business that's paying all the bills just yet. However, that doesn't mean that hosts within the short-term rental space aren't really growth-oriented. They echo that they want more profit, more properties, still showing a lot of ambition, and only 17% of hosts who we surveyed said they want to continue to run their rental as is. They're looking to make changes and introduce a lot of new options and optimization. Another thing that really is coming into play with this space is increasing professionalization and use of property management firms to run the rentals. 60% of hosts who we surveyed said they use a property management company or service to handle all aspects of the rental, while 22% are running it fully, and then about 1 in 5 at 19% are really splitting the work. However, when a property manager is involved, we found that they do have a good ability to help hosts reach their financial goals with what they need. That became especially relevant in 2020. The data is showing that if there's a real crisis, that's when hosts benefited financially a lot from having that property manager on their side. That was the sector that was most likely to continue hitting their financial goals during COVID. Those hybrid models aren't working quite as well for many people, but it's also very possible that once we are able to collect more data on 2021 at the year close, we'll find that it looks more like 2019, where those self-managed hosts who are still super independent are also hitting their financial goals more frequently. And with everything continuing to unfold, prices getting higher and higher with ADRs and occupancy rising within the short-term rental space, it also means that a big ecosystem of supportive technology and ancillaries is continuing to develop specifically to service short-term rentals. Now, while there are more tech options than ever before and many resources to help run a rental, we find that a big factor that's introducing these into rental operations is having a property manager on a host side. This was one of the best predictors of whether hosts were really tapping into technology and really using what's available for them. And an interesting thing we found was that a property manager was more likely to be introducing all those technological efficiencies than a desire to make a profit. So we're seeing something going on in the market here that's pretty interesting, where property managers are really understanding of how much efficiency it brings into the market, but even the hosts who are trying to make money don't seem to necessarily be running to adopt technology quite at the rate we might expect. However, a lot of these people are looking to scale their businesses up, and we're seeing that even at those small stages of growth, once they hit 3 properties in a portfolio, that's when they're really starting to think more about how to tap into all these tech options and ancillaries that are available within the ecosystem. Once a host reaches 3 units, they become a lot more optimization focused and asking themselves, what can I insource more? What can I do more myself? What should someone else do more? However, one of the big challenges that still remains is that anxiety about rental property damage is high. It has a big effect on the way hosts are thinking about running their properties, making their house rules, and it's also affecting some of the people who are potential hosts who are thinking about starting a property but just aren't ready to take the leap just yet. As a result, one of the ways that they're coping with this is pretty high rates of purchasing insurance. It's beyond the platform coverage insurance that's available. 68% of hosts overall purchase liability insurance beyond what's offered. And we see that as they become more established in running their businesses, and also if they become more profit oriented and have nicer properties, that really makes them more likely to realize they need to insure their property and they need to purchase something else. This is also affecting people who haven't entered the industry just yet. It's always so important to watch the future hosts and learn what's on their minds. Roughly a third of potential hosts who already own properties to rent are concerned about property damage, what happens when you put your property out in the sharing economy. So one of the most common things that they say would comfort them and make them more likely to enter the short-term rental market as a host is knowing they could keep their property in good condition, protect it from damage, and protect their furniture and decor from damage. So that's the most I want to be talking consecutively.